So, welcome to our new podcast. We have someone very dear with us, our first investor, Ujwal. Welcome, Ujwal.
Thank you, Neha.
Yeah,
Thanks a lot for having me.
I think a
It's my
pleasure.
pleasure to be here.
Yes, always. So, Ujwal is an alum of IMA. He's not just a seasoned investor, but also a two times entrepreneur, which is a testament to his deep understanding of the startup ecosystem. Ujwal's journey in the world of investment is marked by significant contributions as a founding partner of TDV Partners, a venture firm renowned for its thesis driven investments in startups with global admissions right from their inception, hypergrow included. So, Ujwal, I think it's great to have you. I think it's great to have you in our office. And I think, one question that's been lingering in my mind, articles पढ़ रही हूँ, LinkedIn पे हर जगह है. I'm seeing every other day some news popping up. Why are so many startups closing down? What's the reason?
That's a question on everybody's mind, I guess, at this point of time. But we need to step back and see where it is coming from, right? Most of the startups fail in the initial 2 to 3 years of their journey, right? In fact, 80% of the startups, as per the data available online, fail in the 3 years from the initiation. And this is 2023. If we go back 3 years back, which is 2020, that was a time when COVID hit us. A lot of people started thinking about what next, and a lot of people started up, right? This was followed by 2021, where we saw crazy funding happening globally, not just in India, but globally.
Euphoria, yes.
Yeah. And that was a zero interest rate era where money was flowing freely everywhere. And somehow things changed over the last 1.5 2 years, I would say. 2022 onwards, it started dropping. The interest rates by Fed in the US started increasing, and diametrically oppositely, the funding in the VC ecosystem started dropping. So I think all of this boils down, and hence the flow of VC money has also gone down, which is one of the critical factors for a lot of startups shutting down. But having said that, the companies who have strong fundamentals, who have strong unit economics, who have strong business acumen, they are surviving, they are still raising.
Right.
But a lot of companies which didn't have that, which didn't have PMF, they are shutting down, and it's natural. So that is going to happen. In fact, I expect more number of even bigger startups to fail in the next 6 to 12 months in 2024. So my sense is, or my prediction is, 2024 will be more brutal than 2023. So, yeah.
Ouch. Okay, that is scary to hear. But you said some fundamental things is where these startups really failed at. What are these fundamental things, and what should early stage founders really be cautious about?
So I think fundamental things, there are multiple reasons why startups fail, right? One of the major one is co-founder conflict, right? That is one of the key reasons why a lot of startups fail in the initial 1 to 2 years itself, right? Then obviously there are reasons like PMF not being found. There is no startup founder fit, which is also a very important aspect. Then a lot of times people have built products which customers don't want, right? It's there in the head of the founder, but that is way away from the reality, what customer wants or what customer is willing to pay, right? There are 2 3 different things, I would say. What founder is building, what customer wants, and what customer is ready to pay for, right? There needs to be an alignment between all 3 of this, then only it will make sense. Many times that alignment is not there, and hence it doesn't go through. Then obviously there are challenges around unit economics, right? A lot of founders, what I've seen, a lot of early stage founders especially, they don't understand the basic unit economics, how a business functions, what economics need to be happening in order to sustain the business, right? So that is something, another reason for startups failing. And then obviously dearth of capital in the high growth phase, because at the early stage, the whole definition of startup is to grow fast. If you're not growing fast, then you will die, right? Or you won't get funded. So,
I think, yeah, definitely. I think you mentioned the term unit economics, right?
Yeah.
It seems like the slang of the investment world. Your unit economics should be perfect, but what is unit economics?
So unit economics is basically at a fundamental individual unit level, is a product or a service profitable or making money or not, right?
Got it.
If that is making money, then it will make money for you at scale as well. So just to give you an example, let's take a beauty or personal brand where you are selling the product for $100, right? That is your, say, the net price, right? Even before that is the gross price, say, where it is priced at 120, and 20 is GST which you are paying
Right.
to government, and there is some return and whatnot. But 100 is what you are making after paying all the taxes. Out of 100, there is some cost of goods sold, right? Which is COGS. Uh, let's assume that is 20. So then you are left with 80, right? That is the gross margin, which is called as GM in VC
Okay,
terms
yes.
or in finance
Yes.
terms. Then you have CM, CM1, CM2, and then you have EBITDA, right? So this 80 is your gross margin,
Right.
is basically the money which company is making, right?
Got it.
Out of that, then you reduce the logistics, packaging, all
Yes.
that cost associated with it. Let's assume that is another 20. So you are left with 60. And this 60 is your CM1, which is contribution margin 1.
Right, right.
After that, you reduce the marketing cost and all the other costs related to branding, marketing, everything. Let's assume that is another 20. You are left with 40, right? Which is your CM2, which is contribution margin 2. And after that, you are left with all the fixed costs, which is, say, your office rental and all the employee costs and fixed costs, right? So ideally, it is expected that a business should make money at CM2 level, right? At least that should be positive in most of the D2C startups or beauty personal care startups. That is the expectation. And if you are profitable even after the fixed cost at the business level, at EBITDA level, great, nothing like it. That
Yeah.
is the dream state which most of the startups, most of the founders, most of the investors want their companies to
Yeah.
reach, right?
Definitely.
But yeah, I think like very few make it there. But we will see more and more companies going there as the startup ecosystem matures in India, as the paying capability of Indian Indian audience increases, right? So, yeah.
Definitely. I think then maybe is this the reason why investors are asking for their money back? So any comments on that? Would love to know about it.
What should I say? So I think what you are saying is true to an extent, um, but there are multiple reasons to it, right? It's like it's no black and white, right? There are reasons, or let me give you some scenarios, right? There is a scenario where founder has been there, he or she has tried out all the variety of things which are possible, which they can do, but still they are figuring that it is not working out, right? Maybe the state with which they started and what is happening is not working out. In that case, either they don't have the will to try further, or they have tried and exhausted all the options which are available, right? In that case, they want to shut it down and return whatever money is left to the investors, and which is a good thing to do, right? Because that leaves you on a positive note, and that also showcases your sincerity towards your mission and startup, right? That you are returning the money, and that obviously helps you, say, after few days or few years or whenever you want to start up next, you will be relatively in a good books of the investors and in the community in general, right? Then there are obviously second scenario where investors are being brutal because they are also seeing that founder has tried couple of things but it is not working out, and now he's trying to do something in a domain which is completely different from what he was doing or she was doing, right? And they might not be game for it, right? Because when I invest with some particular thought process in mind, right? With some particular founder startup fit which I think out of for. And if that is not aligning in the longer term or even in a say 2 to 3 year time frame, then I might not want to back that particular idea or founder, right? Because for something else, I would have already invested in some other founder if I'm believing in that, right? So yeah, multiple reasons. So yes, that is happening. But there are a lot of nuances. I think I can talk on this for hours and hours.
Oh.
But yeah, I'll keep it short over here.
Okay. Yeah, I think that that's an interesting point of view. So I think obviously in 2021 was the era where money was flowing, and it was all about, are you building a community? Are you getting the eyeballs? Are you, it was a DAO game. Right now, how important is revenue for seed stage or early stage founders? And how are you judging startups based on the revenue model?
So I think revenue is always important and it should be important. Uh, but there's a nuance to it. You should also see what sector are you going after, and like say if somebody is building a AI startup, for example, which is the buzzword, which is the hot thing right now, you can't expect to have revenues from day one in, I would say, most of the AI startups, right? That's not possible because you have to build fundamental models out there. You have to build LLMs which will be trained over years or crazy data, and you'll just have to burn money for initial years. So you can't expect revenue over there. But over there, you track what is the kind of progress which these guys are making, what is differentiated, and other things, right? Whereas compare or contrast that with a D2C startup, which has to generate revenue from day one.
Right.
It has to be unit economics positive. Ideally, it should be profitable because that is also possible at a smaller scale. And if not, at least they should be CM2 positive, right? So that is there. But I would say it depends a lot on which sector are you starting up in. Depending on the sector, revenue is a must-have, or it is good to have, or it is okay not to have as well.
Oh, okay. I think, yes, I think a lot has changed. But how is the funding scenario right now? For early stage founders, is it a good time to kind of go to investors, or you think 2024 would be a better time? How do you see the scenario of funding in India right now?
I think 2023 was relatively a slow year, no doubt in that. The amount of funding which went was lower. But if you compare it to say 2019, 2020 era, it wasn't that less as well, right? If you compare it to 2021, obviously that was a anomaly, it was an
Yes.
aberration. But otherwise, it wasn't that bad, is what I would say, right? So it was fine, and more so like early stage investing is the stage of startups which has gotten least affected by funding because there is maximum dollars available for early stage startups. Even the late stage startup, late stage investors, the likes of Tiger Global of the world, they also started investing early.
Yes.
You have Peak 40, Peak 15, as well as Excel and Nexuses of the world. All of them are investing in early stage, right? So you have more investors right now available at early stage. But having said that, they are asking the right questions. All the investors, including me, are asking the questions which are fundamental, needed for a startup. And if we are not convinced by the answers of the founders, obviously we are not funding.
Right.
What was happening, say 2 years back, was because of FOMO, because of crazy money, everybody was investing in just one meeting and people were investing. That is not happening. That has stopped.
Yes.
Which I believe is good for the overall ecosystem. The cleansing is happening in the ecosystem, which is good for everyone involved. Right. So,
Right. Yeah, I think shifting gears, I think, at let's say early stage founder, the biggest struggle is, I need to have growth also, I need to scale also, I need to look at investment also. How do you kind of manage sustainable growth and have revenue on the side? How does that work out?
I think that's the $1 million question, right? Which most of the founders are always figuring out, and so do investors. Nobody has the right answer to that, but I think both has to go hand in hand. Uh, I think revenues are important, and growth is by default the thing in early stages, at least till Series A or even till Series B. Growth is of fundamental importance. So if you ask me, like, I would prefer a company doing crazy growth, at least from seed to Series A stage, because if that is not happening, then it is not a fundamentally investable startup, right? You can always build a good business which can grow, say, on a 50% year-on-year basis in the initial days and still make good money, but that is not something which could be interesting to a VC, right? Because the asset class is different. The kind of DNA which I as an investor want is different, right? But that doesn't mean that growing fast is bad or growing slow is bad, right? Both are different paths which an entrepreneur can take, and both are equally good. But me or anybody who is looking out for VC investing or VC funds, growth in the early days is of utmost importance. If you can grow with revenue, nothing like it. And if you can grow with profitability, that is investor's dream come true.
Yeah, I think but growing with revenue, but let's say I burn a huge load of cash, right? I burn money to get revenue and that shows immense growth. Are those factors being considered now? Because I think, 2 years back, if you show growth, but you burn money, even if you're CM1, positive, negative actually, CM1 negative, it was still considered fine because it's scale. The thesis was that it will sort out.
Correct.
But right now, are investors looking deep into that?
Yeah, absolutely. I think the quality of revenue is become very important. How sustainable is it? Or is it a gimmicky revenue which you have gotten by different ways and means? So that is something which is looked into. People are also looking at what is the margin profile. Is it increasing with scale or is it decreasing with scale? Right. How are the contribution margins improving or not? So all that is being looked into, and that is being considered with much more importance than what it was, say, 2 years back. So
no, I think quality of revenue, I think that's a very nice term.
Absolutely.
I think quality of revenue has become the utmost importance. I think just a last question, some tips, some advice, something for, budding entrepreneurs or people in their seed stage, something that can really, fundamentally change the way they are thinking or apply it to their startups.
I think you need to have a very clear vision and goal and think for long term, right? Startup is a journey of at least 8 to 10 years, right? So you need to plan and set aside 8 to 10 years. If you do that, then your whole thought process changes completely, right? A lot of founders whom I've come across, they don't have that even 8 to 10 year time horizon as well. They think that maybe I'll go in, spend 3 to 5 years, make it, say, 100 million or $200 million company, sell and get out. But that doesn't happen in reality, right? If you go out and see, there would be many or very few such cases where a company has reached 100 million valuation and then sold off successfully and founders have made money, right? So those are good dreams to have, which one should have definitely, but you should also have a reality check as well, right? So I would say dream big, but dream for a long duration of time. That is very important. So
yeah, I think this is a misconception, because 8 to 10 years is a long duration.
Correct.
And most entrepreneurs think, एक साल में कुछ मस्त बना लेंगे, बेच देंगे, and we'll have a lot of money, right? I think that concept, that misconception has to change. Ki it's not a sprint, it's a marathon. 8-10 साल का journey है. You're not going to, just make money like that. It's a slow process, but you need to stick to your fundamentals. So yes.
So उसमें भी होता है, but there are those are outliers, right? मतलब every once in a while you see 1 or 2 startups which have made say 50 million or 100 million or even more in 1 or 2 years, but those are outliers, right? मतलब you cannot build for outliers. You have to build for long-term sustainability.
So Ujwal, why did you invest in hypergro?
So I had a deep conviction, or rather I do have a deep conviction in creator economy ecosystem, right? And this comes from my belief in the future of work, right? I see fundamentally there is a huge shift under which we are going through right now, where the way people work is changing, right? Say till 2020 or maybe before that as well, very few people were doing multiple things at the same time, right? Everybody was stuck, or I would say married to one particular job. But that's not the case anymore. if you see over the last 3-4 years, people have started changing jobs more frequently. If you see the last 10-year trends, then people have started moving jobs more frequently than what it used to be a decade before.
Yes.
And that has accelerated after COVID.
Yeah.
And I see this awareness among the people that a lot of things are important apart from job as well, right? And hence they are putting now themselves at the center rather than their job at the center. And this is fundamentally changing the whole way the world is functioning, right? People are getting into side gigs.
Yeah.
People are becoming creators, and now people have realized that they can earn by being creators.
Yes.
And because of the success story out there of so many successful creators who are minting crazy money, that have become role models for new budding people to start something of their own. Other important aspect, especially when it comes to India, is female participation in work, right? A lot of females have a lot of constraints when it comes to work, especially going out of their homes, right? This is one profession, creating or creator, becoming a creator, which could be done sitting in at home itself, right? And I'm seeing crazy participation from females all over India as well as over the world, where they have taken up this profession and they've started earning and becoming financially independent, right? So yeah, around this whole theme of future of work, where people are focusing on their particular niche skills rather than a job, and at the same time simultaneously working. Say if I am an expert in digital marketing and I know performance marketing, for example, I can do my job in 2 hours, right? Whereas my company is expecting me to be there at 8 to 10 hours, right? I can get it done in 2 hours and I will just do time pass, or I'll just play around for the next 7 to 8 hours. Why not I do over here 3 hours, do the same work in some another company for the next 3 hours, and do the same thing over third company for 3 hours.
Right, right.
That is where the world is moving, or that is the belief which I have. And that is where I see a great opportunity where you guys can support. And that is where I think we had our initial discussions, where you wanted to support the long tail of creators in India as well as world, right? So you are trying to get them access to capital. You are trying to give them financial independence, and that is where it fit into my thesis of creator economy, which you are empowering. You are empowering the next set of long tail creators, helping them grow, or rather helping them hypergrow.
Yes,
right?
yes.
So yeah. And obviously that was one part, and second was like the great team which you have. So yes,
thanks.
absolutely.
Yeah, wonderful. Now second question. Okay. A lot of brands, are talking about कि मेरा CAC बहुत बढ़ रहा है, right? ROAS is terrible. I mean, I don't want to even get to the numbers, but एक के ऊपर भी नहीं होता, ठीक है? तो why is CAC so important? अगर आप बता सकते हो कि why are founders struggling with CAC? Is it the lack of advertisement? Is it the lack of creativity? Is it the lack of a good team? Why and what can we do?
See, for any business to make sense, the customer acquisition cost has to be reasonable, right? Or say you need to make money at fundamental level, right? So, and obviously for that, if you are spending some amount, that needs to be recovered through the sales, depending on the repeat rate. This can become more complex, but I'll keep it very simple. Basically, your LTV, which is the lifetime value of a customer, needs to be higher than the customer acquisition cost, right? But yeah, because of the algorithm, because of the crazy competition out there in each and every sectors, this number is only growing crazily, and all these dollars are going to the marketing giants of the world, which is Meta, which is Google, maybe TikTok globally. These are the guys who are making money, and because of their algorithm, which also they change to suit their own personal or professional financial benefits, they are the ones who are benefiting. But all the founders are struggling, all the brands, all the companies are struggling with their marketing. And yes, I think that is where you guys can come in and help them out. And that's what you have been doing over the last, I think, 6 to 8 months?
Yes. Yes,
So,
yes.
so that's what we have seen. Some amazing work which you have done. Help companies reduce their CACs,
Yes.
improve their engagement rates, improve their download percentage ratios,
Yes.
and everything. So yeah.
Yes, I think where we really found our product market fit was there was a desperate problem that founders wanted to solve, and since they're struggling with Meta, like you said, the algorithms are changing, so all their money is sinking in Meta. They're not getting any return. They need someone to efficiently use their marketing budget and get the desired ROI rather than doing guesswork and being like ये चला के देखता हूँ फिर ये चला के देखता हूँ कुछ तो चलेगा. But I think in hypergrowth the thesis is कि with good number of creatives या फिर good video ads जो engaging भी हो, but with multiple iterations experiment करके, and this is where the AI comes into picture कि let's find you the content that is giving you the best ROI. क्योंकि अगर मैं बोलूँ कि चलो let me just select one influencer and put all my money behind it, you're in the hope कि ये शायद चल जाएगा. But we don't play the hope game. We are like, let's experiment, let's be data driven, let's be backed by good results, see the ROI, the proof is in the pudding, and only then get the ROI that you're looking at.
Absolutely. I think that is where your team comes into play, right? A lot of marketing teams don't get it right. They think this is just an art. You need to do a lot of A/B testing. You need to keep on experimenting and get it. But marketing is more of a science, right? It's not just an art. It's more of a science. You need to understand various things, which I think your team understands with your experience and with your continuous testing out there, which is backed by data, and that is where you drive immense value to the brands which you work with.
Yes. So we recently worked with a fintech brand. It's a very popular brand, Motilal Oswal. And it was strange that a traditional brand like that wanted short video content. And not just any other short video content, but rather vernacular. So they wanted content in Hindi, Marathi, Gujarati, Bengali. And this got us thinking that traditional brands are changing the way they are thinking. They no longer rely on कि चलो newspaper में ad दे दिया या फिर radio पे चला दिया. They know that they have to shift with the tide that is there. So tell me, why is there a shift in this mentality that I have to go to short video ads, and how are companies looking at it, and why hyper local content?
I think what companies are realizing is the requirement or need to feel, how do I say it? Like they want to connect. Yeah, connect is the word.
Yeah.
They want to connect to their audience, right? And through these influencers or micro influencers, who are one of them, they are able to connect well, right? And when these influencers speak their own language, they connect even better. So that is something which is working out, which these brands are also realizing over a period of time. At the same time, this is coming at a much more better cost, is what I would say, compared to say you hiring a big celebrity out there. Then you are paying crores of rupees, whereas this comes with more relatability, with more connect, and a better conversion rate, and at a right price. So why not?
Yes.
So yeah.
I think the long tail creators, or for users, long tail creators is the bunch of creators who are not celebrities, or not like 100K, that's their daily life, but it's their side gig like you mentioned. Long tail creators have the potential to really create authentic content. Correct. And I think that strikes a chord with brands. And I think with so many brands now, with so many D2C clutter, it's important to stand out. It's important to tell a story. And I think creators are the best way to tell your story, where rather than knowing ki I'll never look like a Katrina Kaif, are yaar, I know, but I want someone relatable.
Correct.
I want content that I know ki this is a person that I can relate to, and maybe she is using a product that maybe I can use.
Correct.
So
Absolutely.
I think content is the way.
So I'll give you an example, right? So when it comes to travel, right? Obviously, you have SRK who is publicizing and marketing so many countries. But I go to my trusted people, right? To my friend circle, that is where I look out for inspiration, that
Yeah.
where has my friends gone, where have my friends gone, and that is where I would like to go. So I know I can go there, I can talk to them and figure out, right? So those are a better influencer for me,
Yes.
compared to a celebrity out there who is who I know is just getting paid to sell that,
Yes.
right? So yeah, matlab, there is more relatability,
Yeah.
there is higher conversion because of the
Yes.
relatability,
Yes.
and that is what these micro influencers provide.
Correct, correct. I think authenticity, relatability is the key, and I think, like I said, with so many D2C brands now, I don't know how many there are, but staying, being apart from the clutter becomes very, very important.